In this video, we're going to take a look at the trust fund and explain how it works inside of Million Dollar Baby. So the trust fund is the driving force behind capital synergy. The trust fund is essentially a large sum of money that is invested strategically to generate interest. So the trust fund creates constant buy pressure as well as constant deflation. Let's take a look at how it works. So first off, we have the invested capital. So the fund is invested strategically to generate interest. Now the initial capital was generated from token presales. Next, we have perpetual growth. So the trust fund grows from interest yields from all of its investments, as well as buy and sell tax on the exchange. Finally, we have buy and burn. So depending on the ratio of the fund size to the Million Dollar Baby market cap, interest gained can be used to buy back and burn tokens out of circulation. So let's break down how perpetual growth works. So a portion of the interest generated goes into the trust fund to increase its value, right? So as the trust fund is generating interest, it can be consistently compounding those yields back into the fund to continue growing even faster. Taxation on buys and sells also generate additional income for the trust fund. So there's a 10% buy tax, and 8% of that goes into the trust fund, with a sell tax of 15%, 12% of which goes directly into the trust fund as well. So let's break down how some of these investments are allocated. So investments will be split across a balanced portfolio of risk to reward ratios, similar to a 70, 20, and 10 split. Investments include farming, DeFi products, as well as vetted smaller tokens with significant return on investment. Growth is expected to be significant, with our recent models demonstrating 19% growth in a single calendar month. So let's now break down how the buy and burn mechanism works. So depending on ratios between the trust fund and market cap, that is what is going to determine when a buyback and burn will happen. When the trust fund is 20% or more of the market cap, probability of buys are high. Some or all interest accumulated during this period may be used. And this is what is called Phoenix Unlocked. More about the Phoenix Unlocked and the Phoenix mechanisms in another video. So I hope this helped break down the trust fund and really help you understand exactly how it's working to consistently grow and generate constant buy pressure as well as deflationary mechanism with buying and burning tokens out of supply.